Good morning and welcome to the Morning Bell. I'm Robert, joined by Lizzie and Steve. It's Friday, March 27th, 2026, and we have a lot to cover today. Lizzie, what are the main themes you're seeing in today's news?
Thanks, Robert. The dominant story this morning is the continued pressure on risk assets as geopolitical tensions escalate. We're seeing Brent crude climb above $110 per barrel after Trump's Iran deadline extension failed to ease supply concerns. This is creating a cascade effect across markets. Bitcoin has dropped below $67,000 with over 300 million in long positions liquidated, and we're seeing the largest Bitcoin ETF outflows in 3 weeks at $171 million. The market is clearly nervous about the intersection of rising oil prices, potential inflation spikes, and the ongoing conflict in Ukraine. What's particularly notable is how traditional safe havens are behaving differently. Gold and silver are actually seeing ETF outflows despite the turmoil, while Bitcoin is showing some safe haven characteristics, according to JP Morgan. On the corporate side, we're seeing interesting divergence. Netflix just raised prices across all streaming plans, suggesting they're confident in their pricing power, despite macro headwinds. Meanwhile, the private credit industry is facing serious challenges with surging redemptions and slower fundraising, which speaks to broader liquidity concerns in alternative investments.
That's a significant development with oil prices. How are you reading the market's interpretation of these multiple pressure points?
The market is really trying to balance two competing narratives right now. On one hand, rising oil prices typically signal inflation concerns, which would normally pressure both equities and crypto. But what's interesting is that some analysts are arguing this oil shock could actually accelerate the shift to electric vehicles and renewable energy, which creates opportunities in those sectors. For traders, the key is recognizing that we're in a regime where correlation breakdowns are happening. You can't just assume everything will move together. Bitcoin's behavior is particularly instructive here. While we're seeing short-term selling pressure and retail capitulation, whales have accumulated 61,000 BTC over the past month. The supply and profit metric has dropped to 50%, which historically has preceded strong rallies, with Bitcoin gaining 655% the last time this happened. So there's a real divergence between short-term pain and potential long-term setup. For stock traders, I'd be watching the consumer discretionary sector closely, especially given the earnings reports we're seeing and the fact that corporate bonds are starting to trade more like equities in terms of volatility. The average Wall Street bonus, being 3 times typical household income, also highlights the wealth disparity that could impact consumer spending patterns going forward.
That selectivity is going to be key in this environment. Steve, let's get into the economic numbers. What's the picture looking like?
Thanks, Robert. Earlier this week on Wednesday, we saw initial jobless claims come in at 210,000, exactly matching the forecast of 210,000 and up slightly from the previous reading of 205,000. That's a relatively stable picture in the labor market, showing no major deterioration despite the broader economic pressures. Now today, we have two important consumer sentiment releases that will give us a real-time read on how households are processing these geopolitical tensions and rising energy costs. We're getting the Consumer Confidence Index, and based on the recent trend, we saw it come in at 55.5 in mid-March, which was slightly above the forecast of 55, but down from the previous 56.6. That downward trajectory is concerning because it suggests consumers are becoming more pessimistic about economic conditions. We're also getting the University of Michigan Consumer Sentiment reading today, which showed a similar pattern in March at 55.5, matching the forecast but down from 56.6 previously. These sentiment indicators are particularly important right now because they directly impact consumer spending, which drives about 70% of our economy. When consumers feel uncertain, they pull back on discretionary purchases, and that can create a self-fulfilling slowdown. The fact that both readings have been trending lower while we're seeing oil prices spike is not a good combination. It suggests that households are feeling the pinch from higher energy costs and broader economic uncertainty. For the Federal Reserve, this creates a difficult situation because rising oil prices could push inflation higher, but weakening consumer sentiment argues against aggressive rate hikes that could further damage confidence.
Those sentiment numbers are definitely worth watching closely. Lizzie, let's shift to crypto. What are the trends you're seeing for the week ahead?
The crypto market is at an interesting crossroads right now. Bitcoin is showing a neutral to bearish near-term outlook, but the longer-term setup is actually quite compelling. We're seeing significant ETF outflows, with ARK Invest even cutting holdings in its own BTC fund, and retail investors are driving widespread selling as prices fall. BlackRock and Fidelity are leading the Bitcoin ETF sell-off, which is putting downward pressure on prices. However, the on-chain data tells a different story. Whales and sharks have bought 61,568 BTC over the past month, and the supply and profit metric at 50% historically marks bottoms rather than tops. Some analysts are calling Bitcoin's floor near $70,000 based on previous bull run performance for Ethereum. The sentiment is also neutral to bearish in the short term, but there's potential for a rally above $2,400 if we see strength in three key indicators: price action, trading volume, and network activity. Right now, Ethereum ETFs just entered their first 7-day outflow streak of the year, which is concerning. An Ethereum ICO participant also offloaded $23 million in ET, adding to the selling pressure. Solana doesn't have major specific catalysts right now, so it's likely to track broader crypto market trends. The institutional picture is mixed. On one hand, we're seeing outflows from major ETFs and liquidations of leveraged positions. On the other, companies like Ondo and Canton are still closing institutional deals despite macro concerns. And GameStop is keeping its Bitcoin position intact under its Coinbase deal. Strategy's dividend equity is bouncing back faster than historical averages, which could unlock more Bitcoin buying. The key risk factors are continued geopolitical escalation, potential regulatory actions, and the strength of the dollar, which is pressuring crypto liquidity according to analysts. For next week, traders should watch whether Bitcoin can hold the 67,000 support level and whether Ethereum can build the necessary momentum for that move above 2,400.
Thanks, Lizzie and Steve, for those insights. As we wrap up this Friday edition of the Morning Bell, remember that markets are navigating multiple crosscurrents right now, from geopolitical tensions to shifting consumer sentiment. Remember, do your own research and consult with financial advisors before making investment decisions. If you found today's discussion valuable, please subscribe to the Morning Bell wherever you get your podcasts. We'll be back Monday morning with more market analysis. I'm Robert. Thanks for listening.